Hello, traders. Welcome back to Your Nifty Guy. I hope all of you are doing well. As we step into Friday session after the monthly expiry fireworks, remember this. Consistency in following your setup is what turns market noise into trading profits. In today's video, I'll walk you through my trade plan for Friday so you are ready with a clear roadmap before the market opens. And before we dive in, don't forget to hit the like button, share this video with your trading community and your circle, subscribe to the channel, and drop your thoughts in the comments. It really helps our trading community grow. On that note, we'll start with today's video. Today was a good expiry. How was the monthly expiry for you guys? Please let me know. We already knew that the tone was on the bearish side, but still there were two trades that I took today. One was on the buying side, one was on the selling side, and I'll cover both of them very quickly. A clear plan was to create a short entry below this thing, below this particular yesterday's low with a pullback. Markets opened flat and immediately plunged. Now, there is no way I would like to take these trades, right? I'm sure there would be plenty of traders who would have participated in this fall, made good amounts of money as well. But then, like I said, consistency followed with your discipline is what will cut the noise for you. So obviously, I had to wait for either a pullback and then the low to be taken out, or the reversal setup that I personally use, which happened here with a very good pullback and a higher low which was created. This was the first trade that I entered around here, wherein the stop loss was just around here. Now, this was a slow trade. Because this was a contra trade, this was taken with very low quantities, something that I can afford to take a stop loss with, right? But then the trade was good, trade worked out fine. After creating this high around here, once the market started going sideways, this is the candle around which I got the took the exit. Now, the candle was again with the logic. Again, we were in a long trade. So for me to take the exit, this particular candle fulfilled all the conditions wherein the high was lower than this high, the low was lower than the previous low, as well as we got a closing below the previous candle's low, plus it is sideways. And like I said, once you are into option buying, the slightest of uh, price action going against your trade, cut it off, right? We can take a re-entry in case if this after this particular sideways consolidation, if the high would have been taken out, we could have planned for a re-entry as well. But this is where I decided to get out of the trade with some decent profits. Post this, this is the trend line which I had observed. Now, if I will share the trade above with trend line breakdown about yesterday, wherein I had told that I did not take any trades on that day because nothing formed as per my setup. The breakdown with the pullback came in at 3 p.m., something which I don't take fresh trades for. The exact same setup happened today after this good sideways consolidation. We observed a change in structure. How? I'll quickly draw it for you guys here. This was the higher low, higher high, another higher low, higher high. Then market was sideways. This was the low, another higher low. This low was broken around here, another higher high done, right? So can you observe the change in structure from a smaller, from an internal price structure of a higher high, higher low, wherein this high was not breached, a higher low was formed. Then this low was breached, a lower low was formed, right? Plus, we had this trend line breakdown, pullback, and this was the entry candle at 12:15 on the put side, coming in with full quantities. Again, a quick word of advice. This particular trade, as well as this particular trade, I had taken in the 2nd of September expiry. From the coming week, the regime of Nifty is going to change. The regime is going to change. Nifty's weekly expiry is being shifted to Tuesdays. So the next expiry is now on 2nd of September, which is Tuesday. And this has been a big change, I believe, from the time around 2000 when Nifty expiry has been going on. After 25 years, this is something which has changed. The expiry of Nifty has shifted from Thursday to Tuesdays. So we'll give some time to the market to adjust to that as well, right? Again, people have been very comfortable with the Thursday expiry taking in fresh positions, option seller especially on Fridays, and then again holding it up to the next Tuesday, whatever it is. But the thing, the systems are changing, so we'll again give market some space to breathe, and we'll see how the market is reacting to this new change in the weekly expiry of Nifty, and then we'll plan accordingly. But for now, yes, so Tuesday. So I had taken this long trade as well as the short trade in the 2nd of September expiry and not in today's 28th August expiry. So that is what I preach every one of you, and I always tell in all my expiry videos to make sure to shift your trading to the next day. So if you would have been, for example, if you would have been trading in today's expiry, after this candle, after this high was made, 1, 2, 3, 4, 5, almost half an hour before exit, the market was sideways. And in case if you would have been trading in today's expiry, I don't think you would have been able to hold it with profits, right? Your position would have turned into red. Please go and check the option charts. I'm sure it will be it is still available on the Zerodha platform. You can go and check any in the money option strike in case what would have been the scenario if you would have been holding it. Compare it with a similar in the money option premium chart of next week. You will feel the difference. And that is something which I personally do and I suggest everyone to do. So this was the entry around here, stop loss just above this particular swing high. Markets went down, again went sideways, again went down, sideways, again went down. Now I exited somewhere around this green candle, right? 205. So this was a trade which I held. If I would have uh, held it for even longer, it would have given me much more profits. But this is something where this is the place where I got out of the trade solely because of the RSI divergence that I observed around here. So around here, while the market was making new lows, RSI was making new highs. And again, seeing a good bullish candle, is I decided to cut my trade short. I was already in very good profits. And that was the reason I got out of this trade around here. Now, post this, again, I did not take this particular trade. I did not participate in any of this volatility. I was trying to look at the expiry special trade setup that I do based on the OI post 2 p.m. All my focus had shifted from price, observing the price action and taking trades based on my setup to trying to find out if we get the expiry special trade. Now, the markets did move both ways. Now, there was a good amount of call writing at 24, sorry, yes, good amount of call writing at 24,600 and good amount of put writing at 24,500. If you go and see the open interest chart, it was a market was right in between. So definitely if the market expires in between, it takes the SL of both the people. That happened. But then again, what I want is either a short covering or a long unwinding, not a sword which is swinging both sides, right? So that was the reason I did not participate. Plus, I did not see the kind of exits from any particular strike price that I would want to see to observe that big spike in the option premium prices of the current expiry. So that was the reason anybody who would have entered longs around here would have been butchered. Anyone again entering shorts around here would have been butchered. So that is the reason these are something that you need to pay close attention to. So I hope the expiry trade, the monthly expiry trade that I had taken are clear along with the logic. My logic always remains the same. Just that how is the price reacting to it is something which I based on which I take or execute my trades. So yeah, that was it for today's price action. Now for tomorrow, on a daily time frame, we have gotten a follow through. So we broke down below this level and then we have actually gotten the follow through. The candle might look extremely bearish, but then again, the day was filled with volatility, full of ups and downs. If you can see again, market went down, reached almost the day's high, went down again on a smaller time frame, broke up above a few swings, again went down, and then closed comfortably around the mid mark of 24,500 and 600. So yes, now what I have been observing is there is an open-ended divergence on the 75 minutes time frame. Now, if you see the markets created a new low from this low, whereas on the RSI, the new high has been created. Now, why do I call this divergence an open-ended divergence? Anybody who has not too comfortable or well versed with the idea of RSI and how to spot divergences and how do I use that, there is a video, separate video uploaded on how to use RSI the right way, not the right way, but how to use RSI my way. There is no right or wrong in the world of trading, but how I use RSI personally that helps in my trading is something which I have explained in depth in that particular video. So you guys can go and check. This is an open-ended divergence because tomorrow the price can make a new further low and this RSI level can dip below this. So in case if that happens, the divergence is gone. That is why this is called an open-ended divergence. In case if we do not break this low, even if we break this low and this low of on RSI does not get taken out, and then we move up, the RSI divergence will be confirmed. So till now, it is a open-ended divergence. On 4 hours, again, there's nothing to see on divergence. On daily, again, I'm sure there's nothing to see on the divergence part. Absolutely not. On 75 minutes, we saw a divergence. On 30 minutes as well, again, we see a divergence. You can see this clearly. Markets created a new low, RSI created a new high. So that is something which I'll keep into my mind. Now, this particular fib level has done its job in the sense that it is no longer needed because this was with this particular low into consideration. We have made a new low. We'll not be needing this fib level anymore. We don't need this for tomorrow's planning. I am expecting the markets to remain little bit on the sideways side. On a daily time frame, we have seen two good red candles. Now, this was a good red candle as well, followed by an inside bar with a good breakdown. So this is a very pretty good breakdown around here. And market usually, after a big move, tries to go sideways for some time. So that is something, again, we are not predicting anything, but we'll be ready with everything. So we'll keep the trade plan for tomorrow very, very simple. Number one thing that you need to keep in mind is to keep your trading activities limited. Try to trade in smaller quantities. Do not take your regular quantities that you trade in. Try to trade with smaller quantities. Again, my number one trade setup for tomorrow will be if we open flat. Not number one, but the first trade setup. I get a bearish closing below today's low, and then the high of this candle gets taken out, is where I will be scalping in for a trade on the long side. The rationale behind this is very simple. Uh, Markets will invite fresh sellers, break down below today's low, inviting more fresh sellers, and then the high gets taken out, triggering the stop losses of all those people who had shorted the markets around here. And that is the move that will be coming because of that reaction is something that we want to capture. And I'm discussing this particular trade setup, which is very, very rare, will happen very rarely, but whenever it happens, it offers a very good risk to reward. And this is coupled with the RSI divergence that we are seeing on various smaller time frames, is something which we can look for, keep a lookout for tomorrow. And needless to say, below this, we are short. I'll keep the price action closely. I'll watch the price action closely once again when we enter this gap area. Now we have briefly touched this gap area, but then again, this is a very big gap area, and prices can react anywhere in between this price area. So that is something that we need to keep a check and will do. Okay, and yes, so what we had taken yesterday was the low, this was the swing high, this was a swing low, but today what we have seen is, just let me quickly on a 75 minutes time frame. Yes, I believe I'll take the entire swing from here to today's low. In case if we open with a gap up or we approach these levels around here, any bearish price action should be taken to create a short entry. Only above this will I be looking for a long entry. Now, again, like yesterday, also we had discussed that we're looking for a long entry only above the fib level, but we did take a long entry around here. Now that was based on the reversal setup that we use. So there's a video, separate video on that as well, the only reversal setup that I use. So you guys can go and watch that video to explain why did we take this particular trade around here. So that will clear some concepts, but then more or less, I am expecting tomorrow's day to be a little bit on the sideways, and then over the weekend, uh, we'll do much more homework and we'll be preparing for the coming week. But yes, that wraps up my trade plan for tomorrow. Remember, it's not about predicting the market, It's about preparing for it and executing with discipline. If you found this helpful, make sure to like the video, share it with your trading community, and subscribe to Your Nifty Guy for daily trade plans. And I'll leave you with this thought: the market rewards discipline, not emotions. Trade safe, and I'll see you in the next video. Cheers.